In today's fast-paced world of electric vehicles, EVs, market dynamics can shift rapidly. Recent developments in the Hong Kong EV market mirror some intriguing patterns seen in the US. But what's causing this trend, and how might it impact stock prices? Stay tuned as we delve deep into the latest news that could be a game-changer for investors. Hong Kong-listed electric vehicle (EV) manufacturers have shown a subdued performance recently. This trend is particularly noticeable with some of the major players like Xpeng and NIO, which have slipped by over 4% to 6.5%. A significant factor behind this is the price reductions offered by several mainland car companies this month. Such reductions are anticipated to ignite a price war in the latter half of 2023. NIO and XPENG, two prominent EV manufacturers, reported their stocks at $102.90 and $66.15 respectively, marking a decline of 6.7% and 4.3%. Notably, NIO was the worst performer under HSTECH. Other players in the market, such as Leapmotor, also experienced a dip, trading at $42.80, a 3.3% decrease. In contrast, the blue-chip BYD company had a slight decline of 0.8%, closing at $257. Now, let's analyze the potential impacts of this news on the stock's value. The price reductions by mainland car companies signal aggressive competition, which could lead to a decrease in profit margins for these companies in the short term. However, from a long-term perspective, this could be a strategic move to capture a larger market share. As more consumers opt for EVs due to reduced prices, there's potential for increased sales volume, which could offset the reduced profit margins. Furthermore, the performance of Hong Kong's EV market seems to be mirroring its US counterparts. Leading US EV manufacturer, Tesla, continued its downward trend, falling by 3% to close at $242.19. Other US-based EV makers like Lucid and Canoo also experienced declines. This parallel between the HK and US markets suggests a global trend, possibly driven by similar market forces or global economic conditions. However, it's essential to consider the bigger picture. The EV industry is still in its growth phase, and such fluctuations are not uncommon. As technology advances and production costs decrease, EVs will likely become more affordable, leading to increased adoption rates. This widespread adoption, coupled with potential government incentives and the global push towards sustainable transportation, could lead to a significant appreciation in stock values in the long run. Focusing on the upcoming trading session on August 11, 2023, there are some crucial surge signals to watch out for. On the upside, the surge signals are $13.75, $14.25, and $14.53. Conversely, on the downside, they are $12.97, $12.69, and $12.19. These surge signals represent potential price points that could confirm a directional move for the stock. If the stock approaches or breaches the upward signals, it indicates a bullish trend, suggesting that the stock might continue to rise. On the other hand, if it touches or crosses the downward signals, it could be a bearish sign, hinting at a potential decline. For instance, if the stock price approaches $13.75 and breaks through it, it might continue its upward trajectory towards $14.25 and possibly $14.53. However, if the stock starts to decline and breaches the $12.97 mark, it could further slide to $12.69 or even as low as $12.19. Lastly, if you found this analysis insightful, don't forget to like and subscribe. And we'd love to hear your thoughts on this topic. Do you think the EV market will rebound soon, or is this just a temporary setback? Share your opinions in the comments section below.